Hello, let's talk about making money, mainly my young people. Let's talk about making money in real estate. Let's talk about eating your cake and having it. Let's talk about making money, living in a house, paying very little mortgage or mortgage, selling it, making a profit, tax-free, having fun, renovating the house. Here it is. You have a Tax Relief Act of 1977 where you can sell your house up to $250,000 profit, which is capital gain. I think that's purchase minus sale. It means the profit. The purchase acquisition price, sales price, the difference between it, I think it's the capital gains. Get with your accountant. That money, a single person up to $250,000 profit on the sale of a house if you reside in that house for 24 months or more. Married, $500,000 profit tax-free for married couples filing jointly. Let's get even crazier with it. Let's say you've been engaged for a year and a half, living in this house, and then you got married. Now you're newlywed. So if you've been living in this house a year and a half together, then you became married, newlywed, another 6 months together equals 24 months. You could sell that house up to $500,000 profit and not pay any taxes. Guess what? You can do it over and over as many times as you want and not pay taxes on the profit. Again, single, if you're single, up to $250,000. If you're married, filing jointly, up to $500,000. So get this straight. You can buy a house below market, fix it up, have fun fixing it up. You're still below market. So if you got a mortgage, your mortgage is below market. So you're paying a little mortgage, live in it 2 years, sell it. Make $250,000 single, $500,000 married. That profit is tax-free, and you can do it again and again and again and again. That's how you accumulate wealth. That's how it's done. Take advantage of the system that's already out there. It's an exemption. Plus, you're living there. You're having fun fixing it up. And whenever you could sell something up to $250,000 profit, single, up to $500,000 married, and not pay taxes, why not? It's real estate. That's what I teach. That's what you should look to do. I'll be right back. We're back. And some of you that are in the military, we appreciate the dedication and example that you lead for our country, led by for our country. Also, military might not have to stay there 2 years. Say if you got, I guess it's called deployment. Say you go out and you got to relocate. You may only be in your house for a year and a half. You could still at that time get a special exemption, and you could still be entitled to that $250,000 exemption. Now, let's just say, again, we got a single person, one last story. You got a single person, or example, that has been in this house. Let's say you got to stay in there 2 years. Let's say you stayed in there a year and a half, which is maybe like 3/4 of the time that's required to get this exemption. But if it's a hardship case where you have to, your job relocates or whatever, sometime they will prorate it. So this 2-year term, if you've only done like 18 months, which is 3/4 of the time, you may be entitled to 3/4 of that 250,000, which is maybe $180-something exemption. Okay. And sometimes we have undue hardship. Maybe someone has this equity and their spouse passes away. There's an exemption that may allow them to be entitled to the full $250,000 of exemption, or the $500,000 prior to the 24-month period. You have to seek counsel or a tax consultant or an attorney. But you can buy below, fix up, live in a house, low mortgage, have fun fixing it up, resell the property 2 years later and make a profit, not pay the tax, and do it over, over, and over. It's the quickest, easiest way for you to take care of your family. You still reside below market and make money tax-free for young couples. Check it out. This is Steve Davis, your coach, signing off.